Hello and welcome to Insurance Mantra, your weekly guide to the world of insurance, only on ET Now. In today's Leadership Insight, we focus on the changing face of health insurance in India, from rising healthcare cost and growing customer expectation to technology-driven claims and new product innovation. The health insurance landscape is evolving rapidly. What will shape the next phase of growth, and how can health insurance become more affordable, accessible, and customer-friendly? To discuss this, I am joined by a very special guest today, Sheila Anand, CEO and whole-time director of Narayana Health Insurance. Thank you so much, Sheila ma'am, for joining our Insurance Mantra.
Thank you, Anand, for having me here.
Okay. Ma'am, recently we've seen so many challenges in health insurance ecosystem. Either it's a dispute between hospitals and insurer, then affordability is also an issue with most of the policyholders. So as per your understanding, what kind of a regulatory changes we can have in our ecosystem so the concerns of policyholders or concerns of insurance companies can be addressed?
So as far as the question that you've asked about the coordination and things between hospital and insurance companies, I think there are a lot of groups who are working. We are coordinating a lot with the hospitals and we are working together. So I'm sure there will be a lot of good outcomes that will come out of these working groups, and there is a lot of progress that has happened in that. Apart from that, basically on the pricing and other things, when we are talking to the hospital, there's a lot of positive responses from the hospital, and most of them. Basically, only when both of us get together, the insurance and the hospitals, we'll be able to provide an affordable policy to the insurance company, to the insurance holder. I think that would be the best thing that can happen in India today.
Okay. When you said that a lot of work is going on, working groups are working, so how much time it will take? Because working group will suggest their recommendation, then some discussion paper will be there, then suggestions will be there, then again the implementation. So as per your understanding, it's a 3 to 5 year process, or short term we can see some sort of changes?
I don't think it's a 3 to 5 years process. I think it is just maybe, see, in the last 3-4 months, there is a lot of progress that has happened. So I'm sure we would be able to present to the IRDA and the CI group. And after that, I think once it is presented, we should be able to implement some of the group suggestions and discussions and all that. So I don't think it's a long project like what you're talking about.
You will be presenting the loopholes.
Yeah, we will not only present the loopholes, we'll give our suggestions on things that can change.
Then can change. Ma'am, globally, if we see, the hospitals are only running insurance companies also, but in India, the model is different. So how that global model is different, where number of complaints, number of issues are comparatively less than in India, which we are seeing hospital versus insurer and affordability, etc.
So Anurag, what happens is that today there are 3 or 4 of us who would, like, for example, there is a provider, there is an insurance company, there is a consumer. Basically, when all 3 of them, we don't trust each other. So when one person handles the entire model, that is where the insurance company, the hospital, and the patient is also belonging to them, what happens there is a lot of trust. So the models that you see abroad, like Kaiser Permanente and all that, are models which are like, they own their clinic, they own their hospital, they own the insurance company. So those are the models that become successful because, one, the cost can be curtailed, and there is a lot of trust saying whether the person who's come into the clinic needs to go into the hospital, whether hospitalization is required, not required. So there is a full chain of activities, and there is a protocol there, right? So that is how those models can be a success, and that is how even Narayana Health Insurance, which we launched, basically this is on the same model.
But conflict of interest?
There is no conflict of interest there.
In that model, I'm saying that because the hospital is only having that insurance company, you have said the positive side that trust can be built in, and if a patient is required to admit or not, that evaluation is proper.
That evaluation is proper, and then if there is an hospitalization required, then the insurance company will pay for it, right? Because there is this entire chain belongs to them, so there is no question of dispute there.
Okay.
So if you notice, we also could afford, and there is a cost containment there also.
Okay.
So even in India, this model is going to come up. But yeah, we are
But
the
in the
early
last
one.
few years, means other than your company, I don't think that there is any other.
So people are going the different way. We were the healthcare company and we went into insurance. But I'm seeing a lot of people who are already in insurance or intermediary who want to get into the hospitals. They've been in the news in the last in the last 6 months. So obviously we will see this coming forward.
Okay, so that will be the new model where insurance companies will have the hospitals also.
Exactly.
Okay, ma'am. Recently we are hearing a lot about the common empanelment process. So what's the latest development on common empanelment and how this common empanelment can solve hospital insurers' issues?
So on the common empanelment, there is a lot of meetings that are already happening. The GI Council and the health insurance committees, all of us have been meeting. And there are a lot of hospitals who have applied to be on the common panel. And there are many good hospitals actually who have applied to be there. So we are discussing with them. And over a period, we will have a lot of hospitals on the common empanelment. And this model would look for a success in future.
So help us understand how this model will work and what are the main components of this model where hospital and insurers both are on the same boat.
So basically it would be pricing, agreement on the pricing based on the infrastructure and other things, and of course grading of the hospitals. And once we arrive at that tariff, and then following the tariff will help each one of them.
Okay, so grading of the hospital as per the geography.
There are different parameters, Anurag. So it need not be the geography. It need not be. So we have a set of parameters, and I'm sure the GI Council is leading it, so they will be in a better position to answer that.
Okay, ma'am. Now I'll move to our rapid fire segment, and you have to answer my questions spontaneously. So shall I start?
Yeah, sure.
Okay, so my first question is, if you could prescribe one thing to every Indian family, what would it be? Exercise, healthy food, or health insurance?
Exercise and see.
So one thing only.
Only one thing is health insurance.
Health insurance. So what is the biggest reason health insurance still feels expensive to many Indians?
Because they look at it as an investment where there is no returns.
Okay. What is the single biggest reason health insurance claims get delayed or disputed?
Because underwriting is not done at the beginning of the policy.
Are we moving from illness insurance to wellness insurance?
In future, yes, we will.
If you could change one thing about hospital billing practice tomorrow, what would it be?
It has to be a very seamless process, so that the data can flow into the insurance company.
Will prevention and wellness eventually become more important than hospitalization coverage?
Wellness will obviously benefit in future.
10 years from now, what will matter more in health insurance? Affordability, technology, or wellness?
Wellness.
Wellness. If you could give one health-related advice to every Indian family, what it would be?
Walk 10,000 steps and please do a CT angio after the age of 50.
One myth about health insurance you wish customer would stop believing.
Customer has to stop believing that insurance companies don't pay health claims.
What is most difficult, running a health insurance company or convincing people to buy health insurance?
Convincing people to buy health insurance.
One health habit you personally never compromise on?
My diet and walking.
Morning walk or annual health checkup, if you had to pick only one?
Annual health checkup.
Health insurance today, protection product or peace of mind product?
Protection product.
Protection product. So ma'am, now what would be your insurance mantra for our viewers? And according to you, what are the challenges in health insurance ecosystem?
So there was few of it in your rapid question itself. So today what is happening actually is that we are doing underwriting only at the time of claims. If you are able to do an underwriting at the beginning of the policy, and if you're able to, and as a person who's buying the policy, if they're able to ask more questions and understand it. I recently even wrote an article where many of them don't understand copay, they don't understand room rents. It's only when they go to a hospital they try to understand that. When we buy a phone, we understand most of the features, but when we buy a health insurance, we don't. So this causes a lot of disputes in the minds of people कि हमारा claim कभी pay नहीं होगा. That insurance company बैठा है मगर वो pay कभी नहीं करेगा. That leads to a lot of dispute. And I would really want everybody to look at health insurance as a peace of mind product and not only as a protection product. And it will go a long way if people in India buy more and more of health insurance.
Thank you, ma'am, for joining our Insurance Mantra show. Time for a short break now. After the break, we'll be joined by Vidya Hariharan. With her, we will discuss the impact of RBI's mis-selling guidelines from a customer's perspective, whether the new rules can improve transparency, strengthen trust, and protect customers from being sold unsuitable financial and insurance products. Stay tuned. Welcome back after the break. In our Expert Speaks segment, I am joined by Vidya Hariharan, insurance expert. With her, we'll discuss the impact of RBI's new mis-selling guidelines from insurance customers' perspective. With these rules, the new rules which is proposed by RBI and will be implemented from 1st of January 2027, will these rules will improve transparency and customer choice, and should banks be required to inform customers about portability and alternative insurance option as part of suitability assessment process? So we'll understand all this. Thank you, Vidya ma'am. Welcome to Insurance Mantra. Ma'am, my first question to you is that what is the impact of the RBI circular on mis-selling from insurance customer perspective? So what do you think that how this circular and directive will impact insurance customers?
Okay, so to evaluate this, let's just understand which customer we're talking about and what is the extent of mis-selling that is there in the market today. Okay, obviously the customer is the customer who purchases insurance in a bank context, right? Because it's the RBI and the banking system that we're talking about. Now, when it comes to understanding what's the current extent of mis-selling, the only way you can actually track this using data is to look at what is the statistics on claims rejection when it comes to health insurance, okay? So now the latest data on claims rejection statistics in health insurance are as follows. About 12% of claims by number, right? And about 29% of claims by value are rejected, right? Now, what this suggests, if you just think it one level deeper, what this suggests is that it's the higher value of claims which are being rejected. And if you go one level further and drill that down, when you think of high value claims, it's typically claims related to cardiac, so heart related claims. It would be claims around hip and knee surgery. It would be claims around accidents. Or it would be complex maternity claims, where let's say the infant had to stay in the NICU for a prolonged period of time. So of these, the top two, if you think about it, right, cardiac and hip knee surgery claims are claims which are related to senior citizens, right? So if you put all of this together, what you're ending up with is a situation where senior citizens specifically who are purchasing health insurance in a bank context, okay, are kind of what you could consider to be a vulnerable segment, right? So what's happening on the ground? Typically, senior citizens have a long-standing relationship with their bank, with their local bank branch staff, which is the way it should be. They get most of their financial advice there. Usually, somewhere in the last 5 or 7 years, they would have been told your health insurance policy is only 3 or 4 lakhs. You should upgrade it. This is good. Okay, because it's true, health insurance of 3 to 4 lakhs for a retail individual is not enough, medical inflation being what it is. So they are told to upgrade it and they go ahead and they say, fine, let's upgrade. Now what happens is they are sold a fresh policy. All right. So here is a customer who has paid at least 3 to 4 years usually of premiums, who has therefore served all his waiting periods, who then is all of a sudden buying a fresh policy. What he doesn't realize is that his waiting period clock has got reset. It has become 0. So if in the next 3 years he claims, he is likely to claim for cardiac, he's likely to claim for a hip or a knee surgery, that claim will be rejected. And the data is bearing this out. So if you look at causes of claims rejection, right? I said previously about 12% of claims by number are rejected. Why are these claims rejected? 25% of those are on account of waiting periods.
So, Vidya ma'am, do you think that RBI should mandate that banks should include portability as a part of the suitability assessment, as a part of a need analysis that they are supposed to carry out? Isn't this regulatory micromanagement?
See, under normal circumstances, I would agree with you. Okay, that this would be very prescriptive on the part of the regulators. But my point is that the circumstances are not normal. Okay, if you look at the health insurance market as a whole, we've got a serious penetration problem in this country. Okay, just look at the number of lives covered under health insurance. About 45% of them are group insurance. They're covered through their employer. Another 45% are covered through the government, Ayushman Bharat type of schemes. So it's only about 10% of lives which are actually covered as retail health insurance customers. Okay. Now, that's fundamentally is because retail customers are losing trust in health insurance at a category level. Okay. So because the situation now in this market at this point of time is not normal, there may be a requirement for a little bit of a regulatory nudge, okay, to ensure that customers who have in the past accumulated benefits from health insurance are in a position to take them forward even as they upgrade their consumption journey in health insurance. Okay, as they upgrade their sum insured in health insurance, they should not lose benefits which have accrued to them in the past. And you may need to have a little bit of a regulatory nudge. I won't call it micromanagement, but a temporary, let's say for the next 5 years, ensuring that portability is a part of every sale conversation by default. And I'm using these words very specifically. Portability being a part of every sales conversation by default might help to restore some of the trust which the customer has lost.
Okay.
That's where we're coming from.
I also want to understand from you, ma'am, that should banks and agents, corporate agents, be held accountable if a customer is sold a new policy despite being eligible for portability and later faces a claim rejection due to a waiting period? What's your view?
Okay, look, from the customer's point of view, whoever is selling a financial services product to them is supposed to explain features to them. Portability is an inbuilt feature. You're not asking for anything, very out of the way. That's on one side. Even if you step back and look at this, just look at this from even from a global perspective. Okay, anybody who sells a financial services product to a customer has got what is called a fiduciary duty of care. Okay, which means they are responsible for ensuring that the customer understands what the customer is buying. And RBI's circular on misselling recognizes this, right? Otherwise, why call for a suitability assessment? The thing though is that let's say that it's just that final 1% which needs to happen for the balance to tip towards customers starting to trust health insurance as a category, which is ensuring that they are not in a position to lose out what they have earned, by ensuring that portability is a part of every single conversation. If that means that the distributor, whoever is selling, it doesn't matter who is selling, whoever is selling to the customer, shouldn't that distributor be or that agent be accountable for what they are selling? The short and simple answer would be yes, right? That's where I'm coming from.
Do you think that RBI circular alone is enough to tackle mis-selling, or does India needs a stronger coordination between RBI and IRDA to protect insurance customer?
Yeah, see, I wouldn't kind of get into the realm of calling this a lack of coordination between two regulators. Okay, I don't think it's that gap. I don't think that's what we're trying to solve for. The underlying issue that we're trying to solve for is a market level issue in terms of penetration and customer trust. Okay, so rather than say that it should be from A regulator or B regulator, I mean, tomorrow it could be in a context where an insurance product is being sold to a mutual fund customer. That might bring in a third regulator altogether. So that's not really the lever which will move the needle here. The point I'm trying to make is that for this market, in this stage of penetration and with this level of consumer trust in health insurance as a category, today portability is a lever that needs to be pushed. Okay, the mechanisms to push it, I mean, you can really get down into detailing that in multiple ways. Could be from the bank selling perspective, could be the agent selling in an insurance context perspective, etc., etc. But the underlying problem that we are trying to solve for here is penetration and customer trust. Today, that lever is portability. So today's requirement is to have a regulatory infrastructure which allows this to happen. 5 years down the line, once we've solved for this problem, the market's requirements will change, and then you may need a completely different, it may require another regulator to take the lead. So it's not really about which regulator is taking the lead or a lack of coordination. It's about what the market requires and how do we solve for, like I said, penetration and consumer trust.
So that's a wrap on this edition of Insurance Mantra, but we'll leave you with our insurance basics. Did you know? So if you are unhappy with your health insurer, you don't have to lose your accumulated benefits thanks to health insurance portability. You can switch to another insurer or another plan and carry forward benefits such as waiting period, already completed for the pre-existing disease. You can port both individual and family floater health insurance policy. Just remember, portability can be done only at the time of policy renewal, and you should apply at least 45 days before renewal. Before switching, compare the coverage, exclusions, network hospital and claim service of the new insurer. So simply put, health insurance portability gives you the freedom to change your insurer without losing key policy benefits. So stay informed, stay protected. That's our insurance mantra.